Welcome back to the channel, everybody. Today we have an interesting story, and we're going to be looking at why Google is actually surpassing Apple. Is Google a buy today? In market capitalization, Google has taken the #2 position right after Nvidia, and that's concerning? Possibly not if you're a Google shareholder. So let's get right into what Google is looking like. Is it a buy today? Is it not a buy? And is it still a value stock as we know it? And before we get into the video, make sure that you like this video and comment down below if you own any Google shares. Let me know how many shares of Google you own down below. Let's get right into it. So Google today, as we know it, is at a $3.89 trillion market cap. And if you compare that to Apple, Apple's at 3.85. So we had surpassed Apple. And that is pretty interesting because you had always seen Apple been the #1 company. And it's always been the #1 and then it became #2 after Nvidia took its throne. And then now it is #3. But does that mean that Apple is a bad company? I don't know. Does it mean that Google is a bad company? I think it means that Google is a great company. So let's get right into what Google is looking like. So the day it is up 2.5%, which is why you have this move of $3.8 trillion. $3.89 trillion to be exact. Look at the company, how it's been performing in the trailing 12 months here. Revenue growth, top line growing 13.5%. That is pretty good for a very big company like Google. To be this big and grow revenues at this double-digit pace is really good to see. But if you look at the bottom line is what's actually intriguing here. 31% of net income growth. But if you look at the EPS growth, this is 34%. Now that really comes from just buying back shares. The company had been buying back shares when the stock had dropped immensely, and that's been feeding back into the shareholders. The money is being returned back into shareholders with money that is going to capital expense as well. If you look at free cash flows, you can see that free cash flows are actually growing 44% on an operating basis. And if you look at free cash flow growth just in general, 31% free cash flow growth. So they are generating immense amounts of free cash flow now, more than they have ever in the past history of the company, besides maybe Q1 of 25. That's on a 12-month basis. And this company right now, what you're paying is not too bad either. A forward PE of 30 for the company of Google. That with a top line of 13.5%, bottom line of 30% net income growth is pretty fair for Google. I would say that you're getting a fair price for what you're paying today. On a price to sales, you're paying about a 9. On a price to earnings growth, you're paying 1.8. If you look at price of free cash flows here, which is really what drives a company, right? The free cash flows really drive a company that the company is able to throw back into the business, buy back shares, and just return capital back to shareholders. This price of free cash flow, you're paying about a 47, which is probably the highest it's ever been in history. But does that mean that we shouldn't buy the stock? Let's dig a little deeper. So if you look at how the company is throwing money back into the business, you can see that on a return on invested capital, they're getting 20%. That is very good for a company of this caliber. To get 20% returns on invested capital, that's where you want to be. This is a company that you want to hold forever, dare I say. And with margins of 59%, given that Google is mainly an advertising business with other bets in other places like Waymo that actually have a physical product, but majority of the business comes from advertising and online search revenue, then that's explaining why this margin is so great. 59%. And that's interesting, right? Because I think that there is a night and day difference when you look at the company of Google versus a company like Apple. Let's look at financials for Apple. In the trailing 12 months here, you can see that Apple had grown top line at 6.5% with bottom lines at 19.5%. Seems pretty good. But if you were to come to what you're paying for the company, you're paying a price to earnings of 31. And you're getting a price to earnings growth of 3, which seems more overvalued than Google is. So if you had to pin me down and say choose one or the other, Google or Apple, I think you're getting more growth with Google. You are getting a pretty great moat with Google as well, given that they have eliminated a lot of the fears with having Gemini kick off, and ChatGPT isn't going to replace Google, and they've actually shown that. So all things considered, you can see that actually Apple's return on invested capital is very great at 45% here. Both are great companies, But if you were to pin me down, I think that Google actually has more of an opportunity to capitalize on the future revolution of what is going to happen in the future. What I mean by that is that they're taking these outlandish bets of investing a lot of capital expenditures. And we can probably just see how much they've invested in capital expense here. So Google in the trailing 12 months, the past 12 months, they've spent about $77.8 billion on capital expense. This is the most they've ever spent. And that is interesting, right? You see so much money flowing back into this business that hopefully you will get that back in a return. I think that shareholders are going to be rewarded outlandishly. Google has been time and time again a performer. If you look at the metrics here, cloud operating margins are at 23%. And just looking at like revenue segments alone, like look how everything is growing across the board here. Google search growing 12%. Advertising, they took this number out, but Google Cloud growing 30%. Google subscriptions, platform devices, 16%. YouTube ads growing 13%. And you would think YouTube ads would be slowing down. People have to compete for screen time. There's Netflix, there's Hulu, there's TikTok and Instagram. But you have Google here with their YouTube business still competing very well, growing every single year. And that's great to see. Now, the Google network has been dropping just a little bit here at 2%, and their other bets dropping 17%. That's only a $1.5 billion play for them. So it's not too worrisome here as well. So I think Google today is actually a decent investment. I think it's at fair value. If you want to look at just where the company had been in the past, looking at the PE ratio here, you can see that PE is about 31 today. It's the highest it's ever been in recent history. The other highest you've probably seen is about a 27 PE. But does that mean that Google is overvalued? Maybe in relative to where it's been in the past, it's higher valued than it's been, but I don't think that it necessarily means that Google is overvalued. You see the growth that happens with the company. Net income growth growing at 30% every single year. And top line, look, 13%. They're just able to grow this business. Free cash flows, actually. This has been growing 30% year over year. And that's interesting. You want to look at a per share basis, 34%. Now, it is the highest it's ever been in history for a price to free cash flow basis. It's because they're throwing a lot of this money back into the business. So that is really interesting to see here. They're buying back their shares at a 1 to 2% clip here. And buying back their shares when everybody should have been buying right around this price point of $170, $150, that is where the money is made. That is where you should have been putting your money. Now, of course, could we go back in time and say, hey, I wish I would have put money into Google? Yes, of course we could say that. But can we do that today? No, we can't. The decision that you have to make today is this. You have to ask yourself, do I own Google already? If I don't, then do I want to pay a 30 price to earnings for a company that is growing top lines at 13% and bottom lines at 30%? Very sizable amounts of growth for what you're getting. You're getting a fair value on the company. Maybe your margin of safety is not as high, is not very transparently there. But I think that you can't go wrong with buying Google today. So if I didn't have a Google position, I would consider adding today. If I'm a new investor, I would say, hey, Google's a great company that is going to do exceptionally well in the future, and I want to own more of it. So if I didn't have a position, I'd consider picking it up. However, I already have a pretty large position as it is, and it's grown to a pretty large position already. So I'm comfortable with the position, and I won't be adding because I think I see a lot of other value in this market as well. Given that there's been so many companies that have been going up, but a lot of companies are staying within their zone of just teetering around, and some companies have actually been selling off due to the recent narratives. So I really like other bets right now. I am not a Google shareholder as of, I guess, a new Google shareholder. I've been an existing Google shareholder, and I will not buy any today. But I really do love this company. It is a great company. They have the greatest employee retention, and you can just see how great the company actually performs. I truly think that if you buy companies with returns on invested capital of 15 or higher percent, you will turn out okay. If their moat is going to be uncompromised by any competition and they have a great way of defending that moat, then it is going to be a worthwhile, great investment. For full transparency, my Google position now is about $32,000 in my public portfolio. That makes up about 16% of this portfolio. Do I want to grow it into a larger position? No, I have money in other areas as well that are allocated to Google. However, I'm comfortable. I like my Google position. I like where it's at. And I don't want to really be too overexposed to this software tech industry. I think it's great to get other bets somewhere else as well to kind of diversify the portfolio in other industries. Now, that being said, I really hope that you guys enjoyed today's video. Google has been doing an immensely great job of performing, doing great returns for shareholders. And I really like Google. I like it. I like it a little bit more than Apple. And if you guys would do so kindly, like this video, because we're going to be dropping heat like this every single week, every single day, if we can. Thank you guys so much for being here, and I really appreciate it. I hope you guys have a great one. Peace out.